All right, ladies and gentlemen, welcome back to the Simple Markets channel. My name is JB, and today I'm going to be going over the exact trading strategy that got Chamnin, one of our students in our community here, and many others funded for their first time. I'm super excited to share the strategy, and yes, it is going to be completely free for you all. And I want to show you some of the certificates here, as well as his max allocation certificate. So I want to start by going over his message here. So we mentioned I've been trading personal accounts along with prop firm accounts, but this month is his best by far, passing phase 1 for 5 separate accounts using 1%. And this was back in December 18th. Now speeding up to present day, he is max allocated with FTMO and passed many other accounts for many prop firms and manages over $1 million in assets under management using prop firms. And not only am I super proud of him and the work he's put in, but overall having 25 funded members out of just 118. We are a small community. We are brand new to the scene. We have one of the best funded member to member ratios out of any YouTube community out there. And yes, I have joined many of them and looked myself. And I'm really proud of this because the majority of these funded members, it is their first time being funded as well. So some people who are struggling with other mentorships and never able to get funded, we showed them this exact strategy. We trained them on it, and now allowing for many people like Chamnin himself to go ahead and pass many challenges very quickly and of course get themselves max allocated and managing millions of dollars in prop firm capital as a community. So we're going to start here by looking at the document you will get. And now if you go in the description, there will be a free download for this. This is our Simple Markets trading plan. I start here with a recommended watch list. Now, once again, this is just a recommendation. I do have a little bit more pairs than this original one here, but it is a swing trading strategy. So the more pairs, in my opinion, I have found the better, as long as you can manage it well. So what we're going to mainly look at today is this entry checklist here. Now we have the higher time frame bias, which is optional, but rule number 2 is a sweep on liquidity. That's one of the first things we're going to be looking for, and we're going to go over some of my winning trades today. The significance of the sweep can vary. It depends on more aggressive or less aggressive traders and their preference. And there will be a fine line between the win rate. So for weaker liquidity sweeps, you may see a lower win rate overall, but you may also find it increases the number of trades that you get, meaning that you will net more profit in the longer term despite the lower win rate. And for those that are psychologically inept and have a difficult time in the live markets, maybe focusing on more clear liquidity sweeps can help with that higher win rate and help you stay a little bit more mentally disciplined to your trading plan. The next step is displacement. Now, this is a 4-hour candle close above the low or high for a break of structure, or just in simple terms, a strong break of structure, something that is very clear. And then a fair value gap is present within that range when the structure is being broken. And last but not least, taking a 75% fib level, entering based on that 4-hour range. And the reason we do this is because it is very simple and mechanical. Compared to supplier demand, like I've used in the past and is very discretional, something like a Fibonacci level is very mechanical and it's very objective, so it ensures that you're entering the same way every time without any type of leeway. And last but not least, we're just going to talk a little bit about the targets and trade management. So I go break even every trade at 1 risk to reward. For those of you that may have seen my video last week, you will see this is an optional rule, but something that you can collect some data on and see if it works for you. Targets overall should be 3 risk to reward fixed, and this kind of happens because of that 75% fib. We'll take a look at this in a minute. And then you set your stop loss at the 0% and take profit at 100%. I typically risk 1.5% of the trade on my personal account, but we give a recommendation here of about 1% risk. As you could see, Chamnin earlier risks 1% in his prop firm evaluations and does a great job with that. And then if price retraces into the range, then runs to TP. This should say pending. It says pounding order can be canceled. But overall, that is the general idea of the strategy here. And for those of you that do download it, you'll get some examples and some takeaways, very important takeaways in my opinion. So without further ado, let's hop over to the charts here. Now, 2 of the trades we're going to be looking at today, one of them is NZD Chef. I am actually in a sell position currently for this trade, and it is risk-free. I'm going to delete this and show you the winning position that I took. One of the first ones, I'm going to actually mark it up manually here because I did have that sell position on my chart. I'm currently in that trade. So based on the rules we just went over, one of the first things I'm going to look for is that liquidity sweep I talked about, which to me is very clearly just shown by this consolidation area. Price reaches below it. So we talked about how a break of structure is the second rule of the strategy. You can see that here. And then when that occurs, we need to see a fair value gap within the range. There is one down here by the low. There's another one down here by the high. I will mark that one out. And then after all of this occurs, we have the understanding that we're working within this low and this high of price action. And then we have this high as well that formed here. After marking all of those out, I take my fib level, we put it at the very bottom of the range, drag it to the top of the range, and then this is what we're looking at for the trade. Now I will say, of course, you can see on my trading view here, it did miss. During spread hour, which is when spread widens on your brokerage, I actually was able to get the tag in on this trade because spread widened and gave me the entry. And funnily enough, the entry was actually quite close to stop loss in this scenario. So even though it does look like this on TradingView, I did end up getting tagged into this order and did have some drawdown here where it came very close to my stop loss level. But inevitably, we could see price worked its way higher and did end up running that take profit level. So like we talked about before, some of the few things we're looking for here. Number one, we saw the sweep on liquidity. I have it marked here on my chart. Number two, we saw that break of structure that occurred, showing a fair value gap. And then last but not least, taking that fib and dragging it from the low to the high of the range, making it a very mechanical way to enter this trading range, and then letting price do its thing and inevitably make me that 3 risk to reward. That's going to be the first trade that we looked at, and more recently I had a Euro USD winner with the same exact idea, and in my opinion a little bit more clean of a trade. So based on the rules that we went over again, number one is looking for that sweep on liquidity, and as we could see, a very aggressive wick candle reaches above this high, and then we very aggressively move back into that range. I use the term aggressively to show that high volume liquidity sweeps are very important, and they show high institutional involvement in a market. And then price works its way and breaks structure lower. Once again, we see that candle close below, but more importantly, just a very aggressive and strong break of structure, showing that we may be likely to continue this bearish trend. And then we have to see the fair value gaps. There's plenty here, so I will not mark it out. We have one here, and two more down here below the range. So all of these are valid for me. We have the sweep, we have the break, we have the fair value gaps. Last but not least, all there is to do is just mark out your range from the high to the low. Take your Fibonacci level and drag it out, and once again set your entry at that 75%, creating that fixed 3 risk to reward ratio for every trade. Price worked its way back up and in very aggressively. I do get questions about this a lot. I don't pay attention to how aggressive price moves towards my entry. As you can see here, these two enormous bullish candles may have scared some traders out of this position. I hold it strong, I set and forget my orders, and you can see I was rewarded for doing so, and price worked its way in, taps me into entry, and then very quickly works its way down towards take profit, continuing that bearish trend and allowing me to secure another 3 risk to reward here. And overall, both of these trades netting me well over $11,000 and off to a great start for this trading year, along with some break evens as well. But a 100% win rate so far, starting off 2025 very, very strong with this strategy. So I'm glad I was able to share this strategy with you guys in this video. If there's any questions you have, feel free to ask. If you're interested in joining the community, you can look in the description below. As always, you can download the strategy in there as well. If you have any questions directly about the community or the strategy, you can reach out to me personally on Discord, and if I have some time, I'll go through my messages and help out. I hope you guys got some value from the video. I hope you learned something today, and I appreciate you all watching, and I'll see you all in next week's video.